Zip has just reported its latest results, posting a net loss of over 450 million Aussie dollars in the first half. Joining us from Sydney is the company's COO, Peter Gray. Peter, great to have you with us. You call this period, the December half, as transformational. Why?
Yeah, thank you for having me. It really was a transformational half for the business. Not only did we knock it out of the park with regard to numbers and growth, we completed the acquisition of QuadPay, which is the fastest growing buy now, pay later business in the US. So it really did go the next step in terms of us fulfilling our global ambition. So the US market is in very early stages of market maturity. Obviously, we've seen the benefits of buy now, pay later in Australia for some time. And obviously the US market is significantly larger with a $5 trillion addressable opportunity. So to be one of the fastest growing players in that environment really has been a great outcome for the business. And on a combined basis, the group really has started to deliver some outstanding growth numbers.
We are also reportedly just days away from a code of conduct being signed by the likes of you and other buy now, pay later players. Can you give us some insight as to what sort of regulatory measures can be expected? There's been talk about capping the amount of borrowing, putting limits on fees as well.
Yeah, we welcome the introduction of the code. It really is the first step in terms of ensuring minimum standards are delivered and maintained across the industry, protecting Australian consumers. So it's obviously very topical, the conduct and the fee structures of some of these products. I think Zip has held itself to a higher standard than the competitive peer set since day one, with ID and credit checks conducted on all applicants. We don't rely on late fees, to make our unit economics work. So I think our view is that the code is just a necessary first step, but it's obviously a work in progress as we continue to develop that to protect Australian consumers from the conduct of those perhaps not doing the industry the best service.
So, Peter, does that code also include concrete measures of what else you could be doing?
It really is a starting point in terms of the requirements, understanding and knowing your customer prior to onboarding them to your services. There's sort of no financial caps with regard to product structures at this stage. It really is dealing with how customers are onboarded and trying to ensure that services are appropriate for each individual user. It goes into quite a bit of detail on how consumers who may have a change in their circumstances are able to deal with financial services providers or buy now, pay later providers. It dictates that all members must be members of AFCA, which is a dispute resolution body here in Australia. Zip also offers a regulated credit product, so we have been held to these standards since inception. So it's minimal sort of impact for our business, but it does mean some changes for some of the newer players in the sector.
Do you expect changes globally, though, when it comes to higher oversight? And I'm not talking only about Australia, but also you operate in the UK and the US. You're trying to expand. Given these concerns, how are you preparing?
Yeah, so it's a great question. Obviously, it's a very topical subject in the UK right now. I think Zip's view has been to always provide our services responsibly. As I touched on, there's no reliance on late fees to make our unit economics work. So I think fundamentally we look forward to working with regulators in each of the jurisdictions to deliver fit-for-purpose regulation. I think it's important to call out, the nature of these products. They are interest-free. They are for lower dollar values than traditional credit products that rely on interest in getting consumers into debt spiral to potentially work. So we do see a place for regulation. It would be unusual in many jurisdictions where the penetration of products and services like Zip is into the millions, that it would remain unregulated for the foreseeable future. So I think we look forward to engaging with regulators to work together with them for fit-for-purpose regulation to ensure consumer harms are prevented by all participants in the industry. But again, calling out that Zip does hold itself to higher standards than other participants.
Zip's share price has been on a pretty wild ride. We saw one day where it was almost a 15% gain. The next day it fell the most in about 11 months and it triggered, in fact, a price query from the ASX. You've talked about, where fair value is. Where do you see that as being fair value? In light of the numbers from today, do you still see the stock as being wildly undervalued?
Oh, look, 100%. I think it's fair to say the whole sector is relatively volatile. Zip is certainly a very heavily traded stock on the ASX. We have a very strong retail following. I think there has been various attention drawn to the fact that Zip is considerably undervalued when compared to market peers. I think Zip continues to deliver faster growth rates and stronger unit economics than some of these competitive peers. And I think arguably we've been penalised to some degree on this concept of first mover advantage. I think the numbers that we're delivering show that there's room for many participants in various markets in various jurisdictions. I think we need to focus on continuing to deliver outstanding results such as we've done today. And, the market valuation will take care of itself as the numbers are too strong to ignore.
Given how much you're growing and how much you're actually spending to expand overseas, does that also delay the timeline for you to become profitable?
I think the important call out from today's results that on a cash EBITDA level or a cash flow break even, we were cash flow break even for the last half as a group. So while we are investing significant sums to chase our growth ambitions in the US and other markets, we haven't done so sacrificing unit economics. So we have a very strong economic model to be able to point to. Again, somewhat of a differentiator when compared to our peers, but to be cash flow break even as we expanded to our footprint into 8 markets was an outstanding result.